Well, Nerina, after almost 2 weeks of gains, the market seems to have started pulling back a little. Reason for concern, or perhaps just some consolidation, Nerina?
Yes, I think the market is really just taking a bit of a breather, trying to digest many of the company news that we've had out over the last couple of days. We've certainly had some of the big stocks reporting results, and it does take the market some time to digest this and really just consolidate around current levels. I don't think anything to be concerned about, really just a bit of a consolidation and a breather before we head off into a new direction.
Well, of course, despite the loss of appetite perhaps for South African equities at the moment, we're still seeing appetite for that gold price. We saw gold going above $1,150 earlier, come back a little bit, but still lots of appetite there.
Certainly at all-time highs, and I think probably the best measure of that is that we see the new gold ETF has just yesterday again listed some additional debentures on that ETF, and we've now seen year to date that it has literally doubled in size in terms of the number of debentures in issue, clearly showing the demand for the physical metal, not only from South African investors but also from international investors. I believe that this will continue to be a theme leading into the new year as investors worldwide demand more tangible assets rather than the paper-backed currencies, of which there seems to be an inordinate amount around at the moment.
Well, as you said, quite a few of the big companies listed in South Africa reporting today. And let's go through a few of those results. We had Investec reporting an 8.7% fall in first half adjusted EPS. But these results were pretty well flagged after a briefing last month, weren't they?
Yes, and the market certainly appreciated the results that came out. I think Investec certainly an interesting one to look at, because so often when we think in terms of a dual-listed stock as Investec is, and we think in terms of a strong rand, we tend to think that a strong rand cannot be good for a dual-listed company. But in the case of Investec, we actually find that this was certainly something that was very good for them, because when we look at the translation gains of all the South African profits, the rand-based profits for Investec into the British pound, this was certainly very good, and we saw some great translation gains for Investec coming through. A similar sort of scenario also from the Australian profits, also translated into the pound, and certainly both in the specifically in the capital market space. That was a very nice booster for Investec in terms of their results. So the market liking those results, and Investec up quite handsomely today.
And of course, like the other large banks in South Africa, Investec is saying that impairments appear to have peaked. So good news going forward for the bank.
Yes, I think there's still lots of opportunities abound. Certainly some of the divisions in the market, like the private equity space, the private banking space, still not finding it easy to have exit strategies for some of their private equity deals available. So it really just means that the book is still there and can be translated into profits in future. Fortunately, they were bailed out by some of the other divisions, so I do believe that leading into the future, there's still lots of opportunity abound for this. We also see that the foreign investors continue to be greatly attracted to our market. Year to date, we've seen inflows of well in excess of 70 billion rand into our equity market, and if we continue at the current levels, this will be a record inflow, surpassing the 71.7 billion rand that we saw in 2006. So certainly shaping up to be a very good year for the equity market in South Africa.
Well, you said the markets appeared to like Investec's results, also appeared to like SAB Miller's results. Its shares were up a little bit earlier, and the results also pretty good in this climate.
Yes, I think SAB certainly has shown the benefits of a very successful global strategy. They've been able to diversify from a South African-based brewery company to a truly global player, being able to bring in between 20 and 25% of revenue from across the globe, from all the major sectors. So whether you're looking at Europe or North America, Latin America or Africa, around 20 to 25% coming from each of those regions. And each of these had their own small success stories, some of them a bit bigger than others. But in Latin America, for example, they've had some excellent cost-cutting measures coming through. In Africa, certainly, once again, the strong rand assisting there, despite the weak consumer demand that we've had in this country, reasonable volume growth, and then again, the rand certainly translated into some decent dollar profits for them. In America, certainly, they've had some very good consolidation consolidation in terms of their pricing structures. So all round, I think a very, very good result for SAB, and the market certainly liking their results. We also saw that there was an upgrade for Diageo yesterday, and I think that is also translated into a great boost for SAB, and we see that share price up over 4% today. The market really liking those results.
Well, we had results out from Ilovo. First half operating profit up 13%. Headline earnings per share down 3%, though it says that's due to a higher effective tax rate. What did you make of Ilovo's results, Nerina?
I think what's quite interesting for me there is we don't always think of Ilovo as a commodity play, but of course sugar is an agricultural commodity. So another beneficiary of the weak dollar, where we've seen sugar prices certainly rise quite handsomely. They're talking about around 20 cents per pound that they've seen in this reporting period. So certainly they've been the beneficiary on the dollar line in terms of their results. The strong rand has hurt them somewhat, and we find it a bit surprising that management has indicated that they're expecting that sugar price in dollar terms to decline by around about 25% over the next 3 to 4 years. That's not quite what we are expecting in terms of the sugar prices. So we actually expect that Ilovo could be a little bit better off than what management is currently indicating.
Well, Nerina, Woolworths AGM currently underway, and apparently there are some concerns being raised at that AGM.
Yes, seems to have been quite a heated and interesting AGM this morning held in Cape Town. Lots of noise coming from the Labour side of the AGM. Demand being raised at the AGM this morning that the employees are asking for a seat on the board, and if they do not get that seat on the board, they're threatening strike action. So an interesting one to watch. We expect that they will be successful in that application, and that we will actually see board representation by the employees. I think the other slightly concerning news that is coming out of there is that Woolies has been one of our domestic industrial stocks that have been big in terms of share buybacks, and they were talking about even buying back some of their franchises as well, and we believe that is going to come to a rapid halt. For me, this is an indication of some activity that we will see over the next couple of months as we lead up to 2010. With a high unemployment rate, employees are really looking at management and at big corporates cashing in on 2010, and they're saying we want our slice of the pie, and we will see increasing levels of shareholder activism across the board, whether it's at employee level or at shareholder level, and this really will just mean increases in labour costs, margin squeezes, and in some cases even top-line revenue growth that could come under pressure. So I trust that we will have sufficient leadership in management, as we hope for it in government as well, and that we can go into the 2010 period and reach the great tourism expectations that we all have, and that we will come up well out of all of this, but certainly something to be slightly concerned about at this stage of the experience.